Yo, what's going on, everybody? It is Wednesday, December 7th, Pearl Harbor Day, December 7th, 1941, the day that will live in infamy. All right, so a lot going on today. Kind of a mixed bag. Dow is up, NASDAQ down, S&P down a little bit. I gotta say, the fiscal flow situation, very strong, very impressive. I mean, I went and I looked, back in August, and August was a month we also had the quarterly interest payments, so that those months that you get those quarterly interest payments, they boost up the flows because they're like an extra 45 billion that come in every quarter. But August, we had that quarterly interest payment. We barely got up to like 20. The 10-day average of the daily flows was barely like 28 billion, and then it dropped right down to 17 billion. That was the bottom of the slowdown in those leading fiscal flows. By leading fiscal flows, I mean the daily spending of the federal government. That's a key indicator that I look at. Is that thing trending down? Is that thing trending up? So like from April, May, that thing was trending down and the market was really struggling, and then it kind of hit a bottom in August and then slowly started to pick up some momentum, and now it's clearly trending up, and that's a positive thing. So now, November, we peaked out with that quarterly interest payment, and the flows got up to like 32 billion, the 10-day average. And it's normal that they pull back after something like a big injection like that, like, every quarter. But the pullback now is only like down to like 22 billion. So that's almost like 30% higher than the low point in August. So you see, for you people who are technical analysts, what's kind of like one definition of a rising trend is higher highs and higher lows, right? Well, we're definitely seeing the higher lows. So that's good. Now, somebody asked me a question here and said, Mike, how can you be so sure that the deficit's going to go up? Like, look, I don't know about long term. I mean, that's a political thing, and who knows? I mean, you could have a Congress and a president that comes together at a certain point and says, all right, we're going to cut Social Security, or we're going to cut, Medicaid, Medicare, Social Security, and defense, like something like that. I mean, I really doubt that's going to happen. I think they probably will at some point cut Social Security because they think like it's broke, it's bankrupt, which is stupid. There's that famous quote from Greenspan when he was questioned, I think it was like back in 2005, 2006 or something like that. He was questioned by then Congressman Paul Ryan, and Ryan asked, should we privatize Social Security, and will that make it more secure? And Greenspan says, well, there's nothing to prevent the federal government from, creating as much money as it wants and paying it to whomever it wants. But the question is whether or not the real assets are going to be there for that money to purchase. It was a brilliant answer, but you could see it like it went right over Paul Ryan's head. Here, I'm going to put the clip up right now.
So having personal retirement accounts is another way of making a future retiree benefits more secure for their retirement? And also, do you believe that personal retirement accounts as a component to a system of solvency does help improve solvency? Because when you have a personal retirement account policy, it's accompanied with a benefit offset. With that feature in place, do you believe that personal retirement accounts can help us achieve solvency for the system and make those future retiree benefits more secure?
Well, I wouldn't say that the pay-as-you-go benefits are insecure in the sense that there's nothing to prevent the federal government from creating as much money as it wants and paying it to somebody. The question is, how do you set up a system which assures that the real assets are created which those benefits are employed to purchase? So it's not a question of security. It's a question of the structure of a financial system which assures that the real resources are created for retirement as distinct from the cash. The cash itself is nice to have, but it's got to be in the context of the real resources being created at the time those benefits are paid, so that you can purchase real resources with the benefits, which of course are cash.
So what he meant by that, will the real assets be there for that money to purchase? You know, you're talking about what are the real assets to take care of people like seniors in their retirement years? I mean, you're talking about housing, you're talking about food, you're talking about clothing, you're talking about medical care, you know, medicine, stuff, maybe some leisure, stuff like that. Like, those are the real assets that, you know, people need to live, right? Transportation, that's what he's saying. He's saying it's not a question of money. The government could create as much money as it wants and pay it to whoever it wants, but will the real assets be there for that money to consume, to purchase? Anyway, so I don't know, like, long term, but I could look ahead and I say, look, they're basically, what is the deficit, or what is the budget balance? What is it composed of? It's composed of spending minus taxes, right? If spending is greater than taxes, then the government runs, they call it a deficit. All right? If taxation is greater than spending, then they call that a surplus, and that's actually a drain from the private sector. So let's take a look. Like, what does the you know, the forward-looking picture look like? And to me, again, you got to look at spending, you got to look at taxation. So first of all, you know, there's really like 4 major components to spending. I mean, the government spends on a myriad of different things, but like the big 4, you're talking about Social Security, Medicare, Medicaid, and defense. And the first 3 that I mentioned, Social Security, Medicare, Medicaid, those are non-discretionary. They're automatic appropriations. Okay, they happen no matter what. The other one, defense, that's discretionary, but, you know, the way Congress treats that, both parties, I mean, that's like the, you know, if you need 90 billion for Ukraine, boom, you got 90 billion. Nobody asks, like, how are you gonna pay for it, right? Or you need 14 billion for an aircraft carrier, boom, you got 14 billion for an aircraft carrier. I mean, nobody asks how you're gonna pay for it, right? So that's like an automatic appropriation too. I don't think that's gonna change. I mean, we are very militaristic as a society. You know, you can't go to a ball game without F-16 jets flying over. Every time you see a military person, it's thank you for your service, this and that. You know, thank you for defending my freedom. My freedom is protected by the Constitution, which, frankly, is basically getting trampled on almost daily, okay? Government spying, all this other crap. All right, so when I look at the situation, all right, I see, first of all, I could even add a 5th thing to that, which has just popped into the picture. I'll talk about that in a second. But okay, next year there's going to be a big increase in Social Security benefits because of the cost of living increase, okay? And it's also applied to things like Medicare and Medicaid. I'm not so sure about Medicaid. Medicare, I think, also gets increases. So big increases there. Defense, we're basically in Cold War II. You're going to get another increase there, okay? The 5th thing that comes in is now interest rate hikes will necessarily cause the government to be paying more interest. So you're going to have interest on Treasury securities. Then the Fed is going to be paying interest to banks on reserve balances, you know, as they raise the rates. I mean, we're talking about just from interest alone, you know, it's going to be around another, I think I did the calculation recently, but it's going to be like another, it could be like another almost 2 trillion. $1 trillion to 2 trillion. That's like a whole new COVID stimulus on top of the spending we have right now. All right, so that's the spending side. I see that definitely going up, okay? Because there's no bill and no budget right now that is anywhere near cutting spending. All right, if anything, they're going to keep levels steady, and those automatic appropriations like Social Security and that stuff, that's going to go up. Okay, so it's going to go up. So what about the taxation side? That's very interesting, because this year, what happened in the fiscal year 2022, which concluded on September 30th, we had a big drop in the deficit. It was down by like almost 2 trillion or a trillion something. And so somebody could ask me, well, Mike, what happened there? Did you, first of all, I did say that was going to happen, because I saw that was going to happen, because the fiscal stimulus, the spending from the COVID, that was ending at the beginning of 2022. And now taxes, you know, they were based on last year's earnings, okay? Which the economy was growing like 7, 8, 9, 10%. And so taxes were really high, and spending came way down. So that's what cut, you know, like if you're subtracting a bigger tax haul from a shrinking spending amount, what's going to happen? The deficit's going to come down. But now, what's going to happen in 2023, it's going to be based on a much slower economy, which means lower earnings, corporate earnings, individual earnings, stuff like that. Okay, and spending is going to go up. You're going to have the reverse situation that you had in fiscal year 2022. All right? So, I'm doing this on an angle. I gotta slide my chair over. What am I doing? I was like sitting in the corner, man. So that's why, like, I could look out next year, and until I see, you know, some political alignment in Congress and who's ever the president that says, yeah, we're all in this agreeing to cut spending and raise taxes, that would be a problem. And then I would be like, I would be short the market, and I would go away for whatever, 2 years until a new Congress is elected. But now that's, you know, we're looking at the opposite situation, where next year you're going to get big increases in Social Security and those automatic appropriations. You're going to have lower tax growth, because the tax payments are going to be based on fiscal year 2022, which was a weaker economy. You're going to have the interest payments that are going to go up. See all those things. So swimming pool analogy, the water's going to go way up next year. It's going to fill up the pool, and that's going to be really good. It's going to be good for the economy. It's going to be good for the stock market, and it may even stoke inflation again. I think, you know, to me, inflation is not a function of the amount of money. That's bogus, and that's been, you know, that's been disproven like over and over again. Inflation this time was really, it was a function of these supply chain issues and the sanctions. All right, and so like, I mean, the sanctions are going to still stay in effect. The supply chain issues, it looks like they're starting to abate. It's been taking a really long time. So we're going to still have these problems with respect to sanctions and maybe supply chain issues. And, you know, it's not about the money. I mean, look, in a capitalist system, which is what we live in and what everybody says, you know, that's the greatest thing in the world. In a capitalist system, it's driven by the profit motive. And when the government spends more, right, when the money is created, then it induces firms and entrepreneurs, you know, to produce more. I mean, because there's more demand. So you usually have, as long as the resources, the real resources are there, like labor and raw materials and energy and stuff like that, as long as they're available, then you're going to have an increase in supply. That's the very nature of capitalism. If you think, I've said this before, but if you think that the growth in the money supply is inflationary, then basically you're saying you're not a believer in capitalism and the free market system. And maybe it's okay to believe that. But I'm just saying, if you're a staunch believer in capitalism, then you cannot argue that a growth in the money supply through government spending, and it's not about Fed monetary operations, that's bullshit. It's about government spending. I mean, if you're a believer in capitalism and the free market, then you should understand that that does not necessarily lead to inflation unless there's something wrong in the system, like, you know, supply chain issues or self-imposed constraints on the ability to procure, you know, the real assets, like these stupid sanctions, okay? And pushing to World War III. All right, I hope that clears it up. That's it for today, folks. Bye.